Since today the United States is celebrating its Independence Day, it's no wonder that the market is almost stagnant. The fact is that US investors are controlling the better part of the market capital. That's why other traders will hardly take a risk today. It's a typical situation for such days. Notably today, the Eurozone has published its producer price index data, which should have boosted the euro. Inflation in Europe continues rising faster than expected, thus causing more and more concerns. Economists had foreseen the indicator to decline to 36.9% from 37.2%. Since the PPI is a leading indicator for inflation, such a forecast gave hope for a slowdown in consumer prices, at least in autumn. In fact, the indicator dropped to 36.3%. Thus, a surge in the Eurozone inflation could be shorter than planned. However, the market showed a zero reaction amid a federal holiday in the United States. Thus, the currencies continue consolidating on the levels reached on Friday. The euro-dollar pair approached the low of the downtrend, thus causing a decline in the volume of short positions. As a result, the decline slackened, allowing the pair to rebound. The area of 1.0320 and 1.0350 is acting as support. Near this area, pressure on the short positions is quite noticeable. The pair may start hovering above the control level and making attempts to bounce. If the price settles below 1.0320, at least on the 4-hour chart, the euro-dollar pair may break the range. Meanwhile, the pound-dollar pair rebounded from the psychological level of 1.20. As a result, the market sentiment changed, thus causing a decrease in the volume of short positions and a rise in the long ones. Under the current conditions, a technical rebound may lead to a change in the market sentiment, thus intensifying the downtrend. Once the price settles below 1.1950, at least on the 4-hour chart, traders will receive the main sell signal. And in this case, the mid-term trend will be prolonged to new levels. Until then, the price may trade sideways. How it will going to be in the short term, we will definitely tell you in our next news releases. Don't miss them and stay up to date with us. See you soon.